Good evening, you're watching Trending Tonight with me, Sanket Upadhyay. Let's take a look at the two stories that we are tracking. Story number one, it was somewhat of a, at least the owners expected that it will be a dream opening, but it is now being reported as the big Paytm crash. But what does it mean for the Indian IPO fever? This dream beginning that many of these tech companies were having, and then suddenly the Paytm crash happened. Obviously, what is happening to the market is a correction right now, which may or may not be a result of this, is certainly not a result of this. But what explains this massive dip in the Paytm crash? What does this mean for the Indian IPO fever and also fintech? We'll speak to experts and know from them, did Paytm make certain mistakes which perhaps others should not? Also on the show is a gentleman who feels that repealing of this law, of the 3 farm laws, and also if the government does agree to the farmers' demand, which is guaranteeing MSP, is going to drive the country to bankruptcy. Why does he feel this way? The Supreme Court's Farm Law Panel member, Anil Ghanwat, speaks exclusively to NDTV in just a short moment from now on MSP guarantee. So we'll have that interview playing in just a short moment. But first, let me introduce our guest, Mr. Anant Narayan, Senior India Analyst of the Observatory Group, Associate Professor Finance and Senior India Analyst of SPJIMR is with us. Nasir Salim, Managing Partner of Flexi Capital. We also have Akriti Bhatia, a political economist, and Mr. Ajay Bagga, market expert and investor, is going to join us in just a short moment. I want to begin with you, Mr. Narayan. What's your reading? What went wrong?
Well, Sanket, I wouldn't say something went wrong. Unfortunately, when it comes to finding market value for a new stock, particularly a stock which is something based on something like technology, where the future is very, very uncertain, there are going to be hits and misses. A couple of years back, we had IRCTC, which did an IPO. And IRCTC today is trading at several times the value at which it was actually IPO'd at. And today it so happens that Paytm has, valued at something which is different from what the secondary market is quoting at. I think I would break it up into 2 parts, Sanket. One is there is a bit of froth in the overall market. Not just for one particular stock, I'm saying for the overall market. And that's because there is a lot of money in the system. The inflation expectations are pretty high. And unfortunately, the return that you and I and our parents get on fixed deposits is very, very low. So if you put money into fixed income, you will lose value. Therefore, people like us are forced to look out for risky ventures, including equities, including commodities, including real estate, to try and increase the return that you get. When that happens consistently for many months put together, you do see valuations of these risky stocks becoming very volatile and very high. And we are seeing that with equity stocks. Now, what you're seeing now is with inflation going up and with a very uncertain global context, some of the money which had gone into chasing these risky stocks is going out. Therefore, you're seeing this volatility as far as valuations is concerned. The basic core story about technology in India and the exciting future ahead, I think, remains. The fact is, if there is one thing we can be proud of, there are lots of things we can't be proud of, but one thing we can be proud of, it's the fact that our digital backbone as far as financial services is concerned is extremely strong. And that has therefore got an amazing future for all the companies which are trying to milk it by way of payment systems, by way of wealth management, by way of several other services. We are digitizing. Therefore, names like Paytm, which have a certain brand recall, do have a certain proposition. It's up to you and me to figure out what the value of the proposition is. But there's definitely a proposition. So I wouldn't really call it a mistake. It's just that there is a combination of things happening. Valuation of markets have been very uncertain. And there is, of course, the timing has been somewhat,
correct. And as many experts are calling this is a correction. In fact, many of the articles that one seems to be reading says that it's going to settle down around 1200. I don't know whether that will happen or not. But Mr. Bagga, Ajay Bagga, market expert and investor, you see, again, I would like to know your view. A reading is that Paytm overvalued itself perhaps became overconfident about its own abilities, whereas the market and people investing asked a very simple question. You may be a huge company, Paytm Karo may be a huge slogan, but what is your business model? We interviewed Mr. Vijay Shekhar Sharma, and he said that we are trying to show people that our business model is different. But do you feel that that basic question remained unanswered? And that's why this becomes a peculiar case and should not be clubbed with the rest. It may be a very popular company, but what is its growth prospect? How is it going to earn?
Yeah, Sanket, my old friend Anant already mentioned all the major factors going into this. See, what is the reality? 74,000 crores have been raised in the IPO market, which is like the maximum in the last 20 years in India already. A lot of loss-making companies are able to raise funds today. Third, those promoters are very glibly telling investors that don't ask me for profits. Look at the runway, look at my growth. Fourth, with the liquidity globally and liquidity in India, with the RBI's very loose money policy, there has been a lot of positive sentiments around the markets. So Paytm has been a function of all these. I would not second guess those investment bankers or the management that did they value it correctly, did they time it correctly, because we have cases on the both sides. We have cases where, Zomato, Nykaa have doubled on listing, and we have cases like Cartrade, which has just kept going down. So, very difficult
No, but Mr. Bhagat, that's exactly where my question comes in. The point is, in a Nykaa, in a Zomato, you see a revenue-generating business model. And correct me if I'm wrong, because I'm no expert. You are the expert. I'm only going by second-hand knowledge which I have picked up by reading websites and doing the research. Here is a company which is insanely popular. You go to any hawker anywhere in this country, you will find that Paytm QR code. It has massive penetration, but perhaps not a very robust business model. This activity itself may not be a robust business model. Is that assessment correct or not?
See, Sanket, I would say the number of drivers they have going for them, they are in wealth management, they're doing equity broking, they're bringing on a lot more things apart from being the oldest wallet, which is being challenged by UPI. So, a lot of fingers in lot of pies, not making money. End of the day, how do you value a company like that? In an excess liquidity environment, you tend to overvalue. The size was high. The market was already overstuffed. There was obesity in the market, and it took a queue, and it has delivered a big blow. And Paytm is being garlanded with all the blame. I would not say that. I would say it's a correction in a bull market. Did the management fail? The investment bankers fail? We'll get to know later. Right now, I don't think we can.
You're saying that just blaming Paytm may not be a very correct assessment of what is happening, because if you see, it's not just Paytm. Overall, the market is coming down. We've seen some sort of a cooling off, if you were. Obviously, a lot of money is being shelved off, so cooling off, I don't know whether will be a correct assessment or not. But the market is coming down and settling down, if I were.
If you see November also, November month to date, we are hardly down 1%. We are down 6% from the top of the Nifty. Yeah. But for November itself, we are hardly 1% down. Today also, foreigners sold 3,500 crores in the equity cash market. Domestics bought 2,500 crores. So you are not seeing a discernible trend as such that these markets are overvalued. Markets, Sanket, they ignored three very big points. On Friday, the Chinese central bank said we have to increase monetary and fiscal stimulus. The oil prices came down. And third, today, Biden appointing Powell again for one more term, and the US markets made their 66th record high of this year. Markets just said no, farm law, Saudi Aramco, Reliance, and Paytm. It's not that simple. The markets were
obviously it's not that simple. This is very complicated business, and I'm aware of that. Akriti Bhatia, I want to come to you now. What's your reading? Do you feel that the Paytm story and the way it's shaping up is going to rationalize thinking from here on as far as other fintech or tech companies from joining in this IPO bandwagon? Perhaps they'll be a little bit more quote unquote realistic about their expectations.
That's right, Sanketji. It's going to be a good lesson for the rest of the players in fintech. But I wanted to begin by saying that even Marx had called the stock market as a space of fictitious and speculative capital, not always reflecting the real economic indicators. Having said that, I think this IPO initial pricing was fueled not by technical aspects, but by aspirations of a rising India. And as you have rightly mentioned, that the penetration and the scale and the user base that Paytm has been able to develop and the smooth interface, it's not even possible to do those kinds of transactions in the US, for example. And I think that why they're calling it as a market mechanism of price discovery and market correction is very significant, because it's not very easy to determine. You can, for example, in Nykaa and all other startups determine revenues and profit making, but profit making is really not the even IPO listing is not the real ambition of is the final ambition of even Mr. Vijay, for example. And the real actual, we need to acknowledge what Paytm has contributed to the evolution of India, and there's huge scope.
No commentary on the company and what it has achieved. Absolutely not. That is not what is being done over here. We are not commenting on what Paytm has done. It has become a household name. Nasir Salim, I want to come to you now.
So they are actually going to venture into lending, into insurance, and diversify the base. And there are so many other indicators.
Which is exactly what I wanted to ask Nasir Salim. Nasir Salim, do you feel that for all these companies who are, into basically transaction platforms, which may not be a source of generating revenue on its own, but when you do a financial transaction platform plus maybe offer certain other services, and that's the business model which the market may at some point understand.
So Sanket, good evening. Great to be back. Sanket, I kind of disagree with some of your panelists in their views on profitability and so on and so forth. I'll tell you why.
Yeah.
I'm of the opinion that we feel that companies such as those of Paytm will be profitable eventually, because you need to evaluate these consumer tech business companies traditionally, not from the way we evaluate traditional companies. For example, price to earning bands, price to book. These are all historical metrics. You need to look at path to profitability. There is something called EV to sales. I don't want to get into the technicality of it, Sanket, but enterprise value to sales basically looks at unit economics, user monetization, number of users on its platform, and then you look at a certain revenue generation model. Now, the only challenge here is that in all these consumer tech companies, one, I personally feel that there is a gestation period which you cannot ignore. If you start from now, there is a certain number of time horizon that is required to generate that alpha or generate those revenues. I think currently the way we see this is that a company like Paytm today, India, and I would say this openly, Sanket, we are as an economy and as a investing, the entire ecosystem of investing, we are an internet stock hungry market, market basically. We're an internet hungry stock market. I mean, there is a lot of FOMO, fear of missing out. You've seen the likes of, I can tell you, enough investors coming to us and asking us, can we invest in Twitter? Can we invest in Facebook? The FANG stocks, Netflix, Amazon, Google. And we come back and talk to them and say, yes, you can, perhaps you can get the LRS route and so on and so forth. So I personally feel that today the entire rush is of course on account of global liquidity, which is coming in. All-time global liquidity is high at the moment. Central banks, including RBI, has ensured that rates remain low and they remain anchored between the current yields of 6.15 to 6.3. Repo rates remain all-time low, and therefore a lot of this is going to start chasing in assets such as these. And from a profitability perspective, I must tell you, Sanket, clearly, time is the essence here. It will be unfair to say that,
which is
these
exactly what
companies
Mr.
are...
Vijay Shekhar Sharma is also saying.
Yeah,
that's
yeah.
exactly what he also saying. Yeah.
Yeah, and I'm of the opinion, sorry, maybe I didn't hear it very well in the beginning, I couldn't hear very well, but I'm also of the opinion that today, Sanket, there is going to be a lot of boom that's going to hit the IPO market. The only distinction here is that you will see some Paytm discount happening over the next 2 to 3 months.
Okay.
Now what is going to happen is people will become a little careful, not blindly investing after today's hit and last week's hit on the IPO as far as Paytm is concerned.
So there'll be a couple of lessons that people will learn.
Some discount will start to show in, valuations start to correct.
Okay, I'm running out of time, but thank you very much for your valuable inputs, all of you, and your views. Let's quickly shift to story number 2, which is a very, very significant story. 2, 3 farm laws, when the announcement was made that they will be repealed. Among other reactions that came in was the reaction of a member of a panel appointed by the Supreme Court to look into these laws. Mr. Anil Ghanwat is a member, now joins us, and he has had some sharp views. Mr. Ghanwat, thank you very much for speaking to NDTV. My first question, what's your view on the laws being repealed? If you could place it on record.
The demand for MSP is for 23 crops today. But when these 23 crops are given guarantee for MSP, then we, the farmers of Maharashtra who grow onion, who grow potato, who grow chilies, tomatoes, they will also demand MSP, and this is their right, because you can't differentiate between farmers producing wheat and rice or even pulses or oil seeds. These are also farmers. They are toiling in their fields, and they are also entitled to get the same treatment as other farmers are getting who are producing pulses or oil seeds or even sugarcane and wheat and rice. So this is discrimination, and demands will come up that our products should also be not only these products, the products which come under dairy and poultry and fishery, they will ask a minimum price guarantee for their eggs and chicken and fish and milk, everything that is produced in India. All those farmers will start demanding MSP legal guarantee. And if legal guarantee is given and the prices in the market drop below MSP, there won't be anyone in the market to purchase their produce, because there is a law now, and the law will say that if anybody purchases the farm produce below MSP, they will be put in jail or they will be penalized. So no one will dare to buy it, and farmer won't have anybody to purchase their produce. So this is going to hurt the farmers. This is going to hurt the other stakeholders like traders, exporters, millers, ginners. Everybody is going to come in a funky position, and so a legal MSP is not going to help the farmer. Legal MSP is not going to help the other stakeholders related to agriculture. The financial burden will be so heavy that government will have to take loan from other countries to
lead the country to bankruptcy.
It will have to take a loan from other countries to just manage the payment of MSP crops. Maybe the private sector will buy some, but till the markets are above MSP. As soon as the markets go below MSP, they will pull out, they won't purchase, and the farmers will be in a very drastic position as to what to do with the produce.
Now, Mr. Ghanwat,
they are having in their fields or in their homes.
Mr. Ghanwat, you have given us a number of reasons and variables because of which the country will be driven to bankruptcy if the farmers continue with their demand of MSP guarantee. But you know, the point is, politically, MSP guarantee has been promised by anyone and everyone when they were in opposition. Even the Prime Minister suggested the same when he was the Gujarat Chief Minister. You think electoral assurances as far as the agriculture sector...
They are all Chunavi Jumlas.
You call them chunavi jugla.
15 lakhs.
So they're not practical and pragmatic.
MSP plus 50%. These are all the promises given before elections just to win elections. They can't be carried out, and no government has ever done what they have said in the manifesto. For example, Congress in their manifesto say that we will do away with APMCs. Is there written document? And now when Modi has done that reform to liberalize the APMC, give some freedom to farmers and give them the freedom to sell out of the market. Congress is opposing it. So all the political parties are just working for the elections. When Congress had brought such a type of reforms, that time BJP opposed them. And now BJP has brought in the reforms. Congress is opposing it. All these parties just want to do their Rajniti. They don't have anything to do with the farmers or the country. They don't care for it. They just want to be elected again and again. And nothing can come out of such type of mindset from the politicians. So farmers have to think very seriously about this. I request the farmers sitting on the border, the farmer leaders, to talk with the government. Okay. With all cards open, even we can join them, and we can draft a policy which should be put on the table in the parliament. There should be open discussion, and whatever comes out should be treated as the agriculture policy. Our agrarian country like India doesn't have an agriculture policy. Do we have one? We don't have an agriculture policy. The decisions are taken whenever the situation changes. We don't have any long-term policy, so no investment is coming in India. Those corporate sector is not ready to invest in farm sector. We don't have proper godowns. We don't have proper cold storages. We don't have processing units. Why? Because they are not sure if the government will allow this to happen permanently. Suppose somebody puts a big cold storage for onion and with a capacity of 10,000 tons or so. And if the prices go high and the government says that the stock limit is only 10 tons, then what will he do with his onion? He will have to just throw it away or sell it at a throwaway price. So because of this situation, investors are not coming to farming sector.
Okay. So you're saying that obviously there needs to be an agricultural policy, a long-term policy. You've also invited the farmers. You're saying that you would help negotiate between them and the government and help to get everyone on the same platform. I don't think, Mr. Ghanwat, that even the farmers are opposed to reform. The only thing is that the consultation process, many of these farm union leaders are saying, should have taken place before the formulation and the passing of any new law and not after. Let's now talk about and ask that the question that I asked initially once again. What is your view on the laws itself being repealed?
This is a very unfortunate decision for the farmers of the country and the country as a whole. Because the system which existed for so long in this company, which is existing now too, had compelled the farmers to commit suicides. More than 4.5 lakh farmers have committed suicide in last 5 years. And the reason is that there is no market freedom, there is no technology freedom for the farmers. And there are laws like Essential Commodity Act, which give the power to the government to pull down the rates of farmers whenever they are getting better prices and they are in a position to earn some profit. If the farmer is not allowed to earn profit, how will he repaying his loans? He is not able to repaying his loans because he is not working in his field or he has no knowledge of agriculture. It is because of the government's decision to pull down the rates by implementing stock limits, by imposing export bans. Interstate trade is also not allowed sometimes. So these are the reasons government is intervening in the agriculture market, and that the the results is that the farmers are going debt-ridden and
Okay.
They are committing suicide.
Okay. Okay. Let's just see if there is a consensus, and I like the point that you made of getting all parties to talk and for them to formulate a new policy, because I think it's nobody's case that the agricultural sector does not need reforms. In fact, farmers themselves want reform. Thank you very much for joining us. That's a wrap in this edition of Trending Tonight. News continues on the other side.